What's up guys, Kevin Cage here with another cryptocurrency update. In today's video, we are going to dive into the Bitcoin price chart and discuss the market cycles. We're also going to discuss some of the Bitcoin Cme Futures gaps. And as you can see in some of my older videos, I've been discussing these gaps since 2020. And look at this guys, Cardano or ADA was at 9 cents, and as I've shared, I sold the bulk of it at 15 cents right before the huge bull run at the end of 2020 like a complete idiot. We'll also discuss the Bitcoin log growth curve and why it's concerning that we are breaking out of this channel like we did during the March 2020 crash. And we'll discuss the weekly Bitcoin price chart looking at some of these moving averages. Without further ado, let's kick it off. Alright, I hope everybody's doing well today and I'm excited for this one. So first things first, a quick disclaimer before we dive into it, just like at the intro of my video. I am not a guru. I have made so many mistakes the past several years you wouldn't believe it. The various mistakes and losses that I've made along the way have served as the foundation and the stepping stone to get to where I'm at today. Nobody has all the answers. We are all speculating in a highly speculative market. And yes, there is opportunity for life-changing wealth. So for anybody brand new to the cryptocurrency market, we are going to keep it high level and basic, and I hope this helps you. If it does, feel free to send this video to a friend. We are on TradingView.com and we are looking at the BLX or Brave New Coin Liquid Index for Bitcoin on the weekly time frame. This is because we have data all the way back to 2010 up until present day for the Bitcoin price chart. We want to see the whole picture. When in doubt, zoom out. So we have over 10 years of historical data in front of us. Crypto is extremely volatile. They call it the Wild West for a reason, because it's known historically for massive pumps. As you can see in this case, over a 60,000% pump, followed by a bear market. In this case, over a 90% crash, followed by another massive pump over 50,000%. And then after that bull run, followed by an 85% crash. So we are seeing blow off top moments per the volume, followed by 70 to 90% crashes every single time. We have 2 to 3 of these cycles depending on how you count them. And please notice in the middle of this cycle right here, this is a red candle. Wick to wick, we witnessed an 80% crash in the middle of this bullish cycle. And then shortly after, climbing over 2,000%. So once again, as we continue, large pump. Notice it's a smaller pump than what we've seen previously because there's diminished returns. The previous all-time high price of Bitcoin around 19K, you can see to the bottom, we crashed over 80%. Now thus far during this cycle, the highest we've gone is just about 2,000% from the low. Each cycle, the returns for Bitcoin are getting lower. Now before adding some details, I wanted to give 100% full credit for this look to Credible Crypto. This is an amazing thread and I will link this in the top of the YouTube video description. Notice this is the Bitcoin price chart and his thoughts on the cycle that he posted on Twitter April 2020, over 2 years ago, with a Bitcoin price chart timestamped April 2020. And I absolutely love this look and his analysis, and he also provided a video back in the day. And FYI, he has also recently updated this with some new information. Now high level, what do we have? The 3-week Bitcoin price chart, and we can see different cycles. His argument from peak to peak, you can see 903 days. The next cycle from the peak, the highest point, to the next all-time high is 1,477 days. The third cycle that we are currently in, he's estimating that it could take us into 2023. Keep in mind this was shared over 2 years ago. As he says right here, and most likely sometime after 2023. Now something else to note is he's measuring from the trough, the very bottom, the all-time low, to the peak of the cycle. We can see a 55,000% gain. The next cycle from the bottom to the peak is diminished. Now it's only 12,000. And now in the current market cycle, he was estimating from this low that we could see anywhere from 4,000 to 5,000% in terms of a gain. Thus far, we've hit about 2,000%. And he did in fact update this part. But bottom line, cycles get longer and extended, and the returns in Bitcoin get lower. That's why I'm significantly more interested in altcoins to get those 10x or 50x returns in the years ahead. Now remember, there is data back here, and some analysts actually consider this the first Bitcoin cycle. We're going to take a look at that. Now this is absolutely crucial to know for the Bitcoin cycles. Notice this previous all-time high price for Bitcoin in 2011, the price was about $33 per BTC. Notice that after Bitcoin rallied, it never went below that price. Next cycle, November 2013, one of the early Bitcoin all-time high prices, and Bitcoin was around $1,100. after it broke through that level right here. It never revisited that level for a backtest and never broke through it. So we have here, it has never been backtested or broken through. And we have this level that has never been backtested. Following this data with 2 or 3 examples of cycles in 10 years of price history, that means that our previous all-time high for December of 2017 in Bitcoin around $19,000 cannot be broken. So let's turn the lights on, and what I'm going to add is a vertical line on the dates of the Bitcoin halving. And the Bitcoin halving dates are as followed. Keep in mind the Genesis block, the birth of Bitcoin in 2009 of January. A few years later, we had the first Bitcoin halving in 2012. The block rewards were cut in half from 50 to 25. And this over time, whether you believe it's just a coincidence or it's an obvious confluence, has led to giant price rises for Bitcoin. July 9th, 2016, block rewards were cut in half yet again. May 11th, 2020 was the most recent one. Our next Bitcoin halving is March 2024. Now let's turn the lights on. And as you can see, I have vertical lines, 2009 give or take. We have 2012. So what happens is we see the bottom of the market after a 70 to 90% crash. It rides a little bit. We have the Bitcoin halving, and some analysts actually measure this as the beginning of a Bitcoin cycle. So as you can see, we go on a beautiful rally, breaking all-time high price. And even during a bear market, we crash, but we never break through the previous all-time high. Years later, another bear market, 70 to 90% crash. We go a little bit higher. Next Bitcoin halving, and boom, break all-time high price and never revisit that previous all-time high price, this purple rectangle. Then we have a bear market, 80% crash. Then boom, the March 2020 Black Swan event crash. Shortly after Bitcoin halving, which is our most recent one in May of 2020. And what happened after? History doesn't lie. We go on a rally, break all-time high price, and have yet to thus far revisit that previous all-time high. Now in this video, I'm going to share some bearish data on why I'm still extremely concerned for the crypto market. Right now, we have people saying Bitcoin is going to 0. We have some saying Bitcoin is going to 100K. I'm more in the gray area. What's concerning is we have broken our lows from summer, from June and July, and we did wick as low as $25,000 per Bitcoin. A lot of bulls are scratching their head because we see a lower low. And this is something you can just type in Kevin Cage gaps and watch some of these. These were all posted in 2020. We still have gaps that have yet to be closed. Now let me zoom in and kind of explain what I mean. Let's go to a daily time frame, just so it's a smaller time frame. We might be able to see it a bit more clearly. So first off, what is a gap? A gap is a gap in liquidity. Of course, this is a lot more common in the futures market, such as on the ticker BTC exclamation point on TradingView, which is the Bitcoin CME Futures. You can see that right here, we have no candle body and we have no wicks. There is a gap in liquidity and price. Some analysts follow this data, and I use it as a confluence. I don't think it guarantees anything, but I do try to use it as another weapon in my arsenal. You can see that we had a gap in price. We then went on to rally for the Bitcoin price chart. Really pumped. And what happened? Later, crashing, we closed this gap. And just so you know, I'm not making it up. Let's zoom in. We can see the bottom of this wick. I drew a rectangle, so this is a horizontal line. From there, has closed this gap to perfection, wick to wick. Now, some people will say, that's just a coincidence. But there are dozens of examples where it closes these levels to perfection. And of course, it could just be a multi-week or multi-year backtest in some cases for some gaps. But I do find it interesting. And here's another example, and this is a very, very tight gap, but arguably, look, there is a gap in this price. When Bitcoin first rallied up to $65,000 and crashed, some analysts, not me, I'm not taking credit for this whatsoever. I saw it, but I didn't really think anything of it because it was such a small gap. Analysts were bullish and said, hey, I don't care if we go to 30K or 20K, we are going to close this gap. And they were right. Because what happened? We closed this gap later on. And let me just zoom in so you can see it. So I just cleaned it up, and we can see from wick to wick, there is a gap in liquidity. And it was closed here. So I showed you some higher gaps. I showed you some lower gaps getting closed. Super interesting, right? And there's a bunch if you go on a variety of time frames. I mean, look right here. We have a gap on the daily, closed. We have a gap right here. It was closed. We even had a gap right here. Price crashed and it was closed. And we still do have a gap for a higher price in Bitcoin, so I'm not calling it quits yet. And as you can see, we have a gap right here at about $34,800. Do I believe that this gap gets filled in the future, meaning that price hits this level? Yes. The question is, what happens first? Do we close this gap out, or are we crashing to the lower 20s? Now time to show you bearish views. Now keep in mind, this is not financial advice. I'm simply showing you some data. You decide for yourselves. As you can see, right on that wick, we still have a gap open. It has not been closed yet. Let's just say the dead center is around $24,900, and it's as low as $24,600. Now, other exchanges may have wicked lower, but I have yet to see it close here. Going even further down, we can see that we do still have this Bitcoin Cme Futures Gap. And keep in mind, I've been sharing this since it came out because I regularly watch this chart. This is not some secret. A lot of analysts look at this. So you can see this gap is at about $18,900, and it is yet to be closed. And if you guys want to be super bearish, there's also gaps on the futures at just under $10,000 for Bitcoin. Now, if you go on smaller time frames, you may be able to find some even crazier gaps. You can go straight on the Bitcoin chart, but I just wanted to show you some obvious ones on the futures. Now, historically, we can see tons of volume, all these green candles, a huge blow off top moment at the end of the Bitcoin cycle. And this happened in 2013, a blow off top. Tons of volume came into the market. This was obvious. You can see how many Bitcoin right here came through the market, and then we enter the bear market. Usually bear markets begin after euphoria. Now, did we have euphoria this year? It's hard to say. I know for a fact that I was euphoric last spring, April and May, but I guess I just imagined much more euphoria and much higher prices for some altcoins before a bear market officially begun. Maybe I was tricked. We can see other examples of huge levels of volume, multiple blow-off top moments, and then the bear market begins. And the weird thing is, yeah, I mean, we see great volume when we first ran early on back in 2020, this huge impulse, but we have yet to have like an obvious blow off top moment. Now, could it be that the market's maturing? There's just more altcoins. We did hit a $3 trillion total crypto market cap, and maybe it's not going to be that easy for everybody. Perhaps, but I just wanted to share that. Shout out to the real Plan C right here on Twitter sharing this from Glassnode, a confluence floor model, which I find absolutely fascinating and accurate for 10 years. You can see that this red line, this confluence floor, has acted as the floor for Bitcoin price, and we have never gone below this price. And look where we are at. We are sitting right on it. I would love to see an updated version of this to see where we're at. He was sharing this for a while, and now he updated it showing that we're touching. So this is scary. And really quick with the Bitcoin logarithmic growth curve, I think this is a great way to measure assets. I personally do this with the XRP price chart long term. You can see that Bitcoin's price, for the most part, has stayed in this giant channel. We did in fact fall below it during the March 2020 crash. And look where we're at today. We're just below it. So with today's landscape of inflation and everything in between, we are either going to have one of the worst crypto crashes that we've ever witnessed, or it's going to be the biggest fake out in history and we continue this cycle. I also recommend this book as a great foundation for anybody that's been in crypto for less than a year. I think it's like 10 or 20 bucks on Amazon. This is an Altcoin Trader's Handbook by Nick Patel. Now, some of this information he's discussing trading altcoins and Bitcoin in 2014, but I still feel like the psychology and some of the skill sets that he shares will serve a good foundation. Obviously, we have to apply it to a much more complex and larger market today. But I think it'll serve as a great foundation to understand these phases in crypto. And even if you're down 90% in some altcoins, this gives a lot of great perspective. So you can get this somewhere on Amazon. So for the BLX, we're just going to use some basic moving averages on the weekly time frame. You guys know I love my EMAs, but for today, we're just going to use our standard moving averages. So we're going to use the 50, we're going to use the 100, and the 200. So as we can see historically, dating back to even 2014, the Bitcoin weekly price chart always rides and stays on top of this red line. This is the 200 weekly moving average. Zooming in, we can see wicks below, but candle bodies holding on top of it for the most part. Of course, during a bear market, after 2013, we have death crosses of moving averages. Then after bottoming out, boom, goes on to the next cycle, another cup. During the bear market that we witnessed in 2018, we can see that we bottomed out after a variety of death crosses, meaning that the smaller moving averages, like a 50, cuts down through a larger one, or a 100 in this case. So the yellow cutting through the blue. Bottoming out, double bottom on the 200 moving average, this red line. And even during the Black Swan event of March 2020 for the stock market, the global pandemic, you name it, candle bodies for the most part still held this level. Yes, we did have wicks to lower levels. But then of course our moving averages got into position like always after the Bitcoin halving and we rallied. No matter how you view this market, guys, long term I have complete faith. In my recent videos, in my recent blog post, I just want to emphasize, the crypto market is roughly 1% of the global equities market, with approximately 4% of the global population even holding any crypto assets. Just over a $1 trillion market. Meanwhile, the derivatives market is over 1 quadrillion, the global real estate market is over 300 trillion, and the global equities market is over $100 trillion. Or a fraction. Remember that we recently did a 30x in market growth from 100 billion to 3 trillion. That is a 30x or 3,000% increase. And hate to break it to you guys, but I am still extremely bullish on the crypto market cap and the crypto asset class in the years ahead. We are going to be in the dozens of trillions. Even looking at Amazon stock in the year 2000, all the way to the low in 2001, we still reach a full 34 Fibonacci extension thus far. As I showed in yesterday's video, that's a 95% crash, followed by a 60,000% pump. And as shown in the blog post, this is a drop in the bucket. We're at 1 trillion. Retirement accounts alone in Q1 of last year were over 12 trillion. Plus the metaverse being a $10 trillion market opportunity, plus the gaming market, plus NFTs and new use cases that we've never even thought possible, plus Web3, plus IoT, you name it. This asset class will take time to mature, but it's going to happen, just like the rise of television, radio, the internet, telecom, with the mobile phone and social media, and new applications and streaming. This will be no different. Even looking at the total market cap dating back to 2013, we're going to draw a Fibonacci retracement from the high to the low. How high have we gone thus far? So far, we have in fact surpassed the 89 Fibonacci extension, and where's that wick? Doing a back test on that level today. So looking at the total cryptocurrency market cap, let's look at some projections. Using the swing high from 2018, we can see we're sitting on the 1618 Fibonacci extension to perfection. We have reached as high as the 3618, and yes guys, we do in fact reach these levels in the future. And here's a quick parallel channel for the total market cap of all of cryptocurrency. Even using these trend lines, it still seems relatively valid. Touching here, turn to support, falling, turn to resistance, resistance, again acting as resistance. Following this trend in the future, yes, this takes us to over a $10 trillion market. Any doubt that you have or concern should not be about will this market survive and how big will it get. It's going to be enormous. The concern that we should have is finding assets that are future-proofing and that will survive. If any of us are able to pick some of the assets that will be in the top 50 in the years ahead on CoinMarketCap, you are going to make life-changing wealth. Bitcoin at its all-time high price surpassed a $1 trillion market cap as a store of value. Highly liquid, yes, but there are going to be new technologies that serve as the bedrock for other asset classes, and they will reach multiple trillion-dollar market caps. Yes, Ethereum most likely does. It's extremely deflationary. But I'll be betting on other altcoins that I believe have a much higher ROI. If crypto has taught me anything, it has taught me patience. The next Bitcoin halving will be in 2024. I'm hoping to see the altcoin market really mature. I'm hoping to see regulations in the crypto market. I'm hoping to see Bitcoin dominance fall down in the future. Unfortunately, in the short term, it may be the opposite. And I want to see the promising utility-based altcoins rise to multiple billion, maybe even multiple trillion-dollar market caps someday. Now, looking at the moving averages during past cycles, as we can see in the past, when Bitcoin closed a weekly candle below this yellow line, the 50 moving average, we slowly started stepping down to the next moving average, in this case our 100, which is the blue line. Once we broke that and started closing below this blue line, the 100, we fell all the way down to the 200. That's very bearish. And of course, there is plenty of hope for anybody that can ride out the storm, take advantage of these low prices, improve your position by multiple X's here. And of course, when the bull market or the bulls return, that's where life-changing wealth is made. Life-changing wealth is made during the 80% crashes. Same thing looking at these levels after 2017 for Bitcoin. Remember, all-time high price around 19K. Once it closed below the 50 moving average, it turned bearish. Notice that we didn't have full candle body closures here. We still maintained on top of the 50, and that was bullish. But now that we fell below back in the day, came back, checked it and hit it to perfection, and then fell below and closed below the blue 100. That's bearish, because then again, historically, support is at the 200. And yes, there's still hope, because again, shortly after golden crosses come back, we have the Bitcoin halving, and we go on to another rally. But it is a bumpy ride along the way. And so what's obvious today is yes, we are below these weekly moving averages. Everybody's looking at this, and yes, I'm concerned. And even looking at this and understanding a sweep is possible, I still want you to keep in mind the overall cycles that I shared in the past. Looking at this red 200 moving average, the current price of that is at about $22,300. And could we come ride those prices yet again? Or is this a fake out? And of course, looking at the vertical line for the next Bitcoin halving, approximately March of 2024. I want to show you both the bullish and bearish outlooks so that you guys can decide for yourselves. And please recall some of the obvious Bitcoin futures gaps, not even on the Bitcoin price chart, not on the Bitcoin dominance. And pro tip, I encourage you guys to go look for gaps on the Bitcoin dominance chart, maybe on the Bitcoin versus ETH chart, maybe on Bitcoin market cap, or XRP market cap or XRP dominance. Look for any gaps. Remember, it's just a confluence. It does not guarantee anything, but it definitely is convincing. So for the futures, we do have gaps just under 10K at about 19,000 and another gap that is yet to be closed at around 25K. But there's still hope because there is a gap over $34,000. And what's fascinating to me, and I have to give credit where it's due, is blockchain backer predicted the Bitcoin all-time high price to be around $70,000. And that was given and posted on Twitter and YouTube before the big run-up. And of course, some haters gonna say, nope, we didn't hit 70K. Well, 69K is pretty damn close to that zone. Do you guys remember last April 2021 when Bitcoin crashed and we created this low? There was one gentleman, I cannot remember his YouTube channel, but I'm subscribed and I love it. He basically showed that it was a classic Wyckoff distribution schematic, like to a T, and very few people caught it, myself included. I did not catch it. And again, congrats to the bears that have been waiting for this move for well over a year. It is well deserved. And regardless of your views on this market, bullish, bearish, neutral, I want you to do well. And unfortunately, everything is an exchange. There has to be losers for winners. It's all energy. So wherever you are today in your journey, I'm rooting for you guys. I've almost given up many times in crypto, guys. I've had probably 2 really big losses in my life, and I always rose back from the ashes. I was working in cybersecurity after university. I kept the faith. I kept dollar cost averaging and knew that investing was the only way that I was going to become free. Not relying on anybody else. And for those several years with you guys too. I mean, look at this, an 84% crash for Bitcoin. During that next high, it wasn't any more fun, a 70% crash. And just to be clear for anybody, I love Bitcoin, I wish it well, I love ETH. I'm just a lot more interested in some other altcoins that have yet to create an all-time high price. I could go through this whole market and show you where I had big wins and big losses. All the internet trolls and all the guys during the last bear market when prices were at all-time lows at these bottoms, they were saying crypto's a scam, you're not gonna make it, blah blah. I kept the faith, I kept studying. Certain alts were taking off shortly after the Bitcoin halving, of course, during the DeFi 2020 bull run. And then I was able to make millions after my first serious market cycle. And the friends and family that don't believe you, or the internet trolls, they don't say anything. I also wanted to give a big shout out and big thank you to Mr. Level Up. Me and him last night got together for about an hour and we did a team viewer session and we compared crypto price charts. So diving in, showing him my looks, him showing me his, and man does he have some fascinating fractals and a variety of gaps that are very concerning. Now again, I can't guarantee anything. I want to keep an open mind. All I know for a fact is that I don't have all the answers. So I'm willing to look at a variety of views. I've been buddies with Chris since 2020, and even if we don't always agree on every little look, it's all love. We have mutual respect. We're all just trying to make sense of this exciting market. This is a fractal we were both looking at last year in September, but now he found some really cool looks to add to this. And what I'm saying is for the XRP price chart, a variety of assets have yet to reach these golden extensions. Notice Bitcoin reached it. Ethereum reached like the 2618. As we can see right here, Bitcoin, ETH, a variety of assets have reached this. Yet XRP and other altcoins have yet to go on that true rally, have yet to create an all-time high price, have yet to even break through the 50% Fibonacci retracement. Notice Bitcoin rejected that 618, candle bodies on the 50%, and crashed below the 236. We crashed below the 236. And my question is this, could it be possible that XRP and other alts that look similar, crashing below the 236, are following a similar fractal that Bitcoin did during the 2020 crash? And that means that even after this blood, there is still tremendous upside. And to be clear, XRP is one of my largest holdings today. And if the opportunity presents itself, like Bitcoin's crash, like Ethereum's crash, I am going to add to my bags in a massive way. I'm going to finish up with this and call it a day. I highly recommend all of you to look at previous fractals of previous market cycles for Bitcoin. I am a huge believer that every altcoin we see today, whether it's in the top 5 or top 500, is copying patterns that we have seen in the past 10 years for Bitcoin. One thing I'd like to emphasize is the Bitcoin price chart, that cycle topping in December 2013, crashing 86%, bottoming out in 2015. Pay attention to this fractal. You can draw some fibs, you can look for some inverse extensions like always, swing high, swing low, drag it over. As you can see, we caught that negative 2.7 pretty well before retracing, getting back to the 236, and everybody's okay again. And I love fractals, but keep in mind they're highly subjective. They're just another confluence to add to your arsenal. Some people believe we could be in this structure where we had that 70-80% crash and still go on to set new highs. And other people believe not a chance. We are in a bear market. We are going to be visiting much lower prices before creating an all-time high price in the future. I'm half in and half out of the market. I have enough crypto exposure that if we rocket from here, I'll be okay. But if we do end up taking out lower gaps and prices enter a real bear market, I'll be ready to make the most of it and start staggering my buys to get as much as possible. If you guys learned anything in this video, be sure to like and subscribe. I wouldn't be here without you guys. And as always, all cryptocurrency links and resources are in the video description. I'll catch you in the next video.